At 2:47 a.m. in Beijing, a small but monumental event took place that would send tremors through the global financial system. A directive, marked urgent, quietly landed in the inboxes of China's largest exporters. The content was stark, with no fanfare or prior warning. Effective immediately, stop all transactions settled in US dollars. The silence of the decision spoke volumes. There were no threats, no elaborate strategies, just one decision. And with it, the world began to tilt off its axis. By sunrise, bond yields across the world were spiking. Wall Street was bracing itself. Global markets were moving in ways they hadn't in years. In the time it took to read the email, the foundations of global finance were being shaken. It was a single, silent blow, yet one that reverberated throughout every trading floor on Earth. Could this be the end of the dollar's reign? Not with military might, not with grand declarations, but with the precision of a quiet strike. As the news spread, analysts scrambled to understand the consequences. Within hours of the directive, dollar-denominated trade out of China dropped 12.4%, triggering an outflow of capital and a spike in US Treasury yields. The world, it seemed, had just witnessed a dramatic shift. But how could such a momentous change happen without a single word spoken? What was behind the move? Was this the beginning of the end for the US dollar, or was it merely the tip of the iceberg? This move wasn't random. It was the culmination of a carefully planned strategy that had been set in motion years earlier. The Chinese government had been quietly laying the groundwork for the yuan to challenge the dollar's supremacy. By March 2025, the yuan's share in global trade finance had already risen from 4.5% in 2023 to over 7.6%. The shift wasn't an accident, it was engineered. While many had been distracted by the daily fluctuations of the dollar, China had been systematically increasing its control, expanding the yuan's presence in global markets, and, more importantly, preparing for the moment when they could make this move. The timing was no coincidence. As China began reducing its holdings of US Treasuries, selling off nearly $130 billion of US debt in early 2025, the shift accelerated. This wasn't a slow unwinding of investments. This was an urgent move to loosen the financial grip of the US dollar. With China's growing influence, the rest of the world began to take note. Saudi Aramco, the world's largest oil exporter, made headlines in mid-April 2025 when it settled its first full oil shipment to India in Yuan. This was a watershed moment. Saudi Arabia, once a staunch ally of the US, had made a bold shift away from the dollar. But this was only the beginning. The impact on US bond markets was immediate. The 10-year Treasury yield jumped to 5.09%, the highest level seen since the 2008 financial crisis. Investors, particularly those in sovereign wealth funds and Asian institutional investors, began dumping US Treasuries in large quantities. In the first 4 days after China's directive, over $212 billion worth of US Treasuries were sold off. Analysts warned that this wasn't just a temporary blip in the market. It was the beginning of a larger shift in how the world viewed the US dollar. As the world reeled, the question on everyone's mind was, if the dollar was no longer the safe haven, what could replace it? Enter the digital yuan. The People's Bank of China had been steadily expanding its digital currency, and by 2025, it had already processed over $250 billion in annual transactions. It wasn't just a theoretical concept, it was a fully operational alternative to the dollar, capable of settling transactions in real time without needing the US dollar as an intermediary. As China's digital yuan grew, the US was left scrambling to catch up, with its own digital dollar still in the planning stages. In response, President Trump called for immediate action, urging the Federal Reserve to cut interest rates to prevent a collapse. But there was no easy fix. Lowering rates might provide temporary relief, but it would further erode confidence in the dollar's stability. The markets reacted accordingly, with the dollar index dropping by nearly 6% in just 5 days. The U.S. economy was feeling the strain. Capital was flowing out of the country, heading towards safer assets, while the value of the dollar continued to decline. The result was an economic landscape in which the US was losing its grip on the global financial system. At the same time, China's global influence was surging. Countries around the world, including longtime US allies, were turning to China for trade agreements and economic partnerships. By the first quarter of 2025, 128 countries were doing more business with China than with the US. This wasn't just a matter of economic volume, it was a reflection of a broader realignment of global power. As China's trade with the rest of the world surged by 8.9% in the first quarter, US exports were shrinking. The signs were clear: China was winning and the US was losing ground. The implications for the US were staggering. The country's fiscal policies, which had long been seen as the foundation of global finance, were now under scrutiny. The federal deficit had already surpassed $1.3 trillion by April 2025, and the country was facing mounting debt. Foreign countries were increasingly reluctant to hold U.S. debt, with foreign central banks reducing their holdings of US Treasuries to just 38.6% of total issuance. Even Saudi Arabia, a longtime holder of U.S. debt, had slashed its holdings to a 9-year low. For the U.S., this wasn't just an economic issue, it was a geopolitical one. The country's once unstoppable dominance in global trade and finance was being challenged. The dollar, long seen as the world's reserve currency, was now in jeopardy, and the world was quietly preparing for a future in which the U.S. might no longer hold the financial power it once did. In the midst of this turmoil, the question on everyone's mind remained: how far would China go? If this was just the opening move, what would checkmate look like? The U.S. was facing a crisis of confidence, both in its economy and its currency. As China worked to build an alternative financial infrastructure, the U.S. seemed content to watch as its position of global dominance eroded. So, as the world watches, one question remains: is the U.S. sabotaging its own financial future, or is China's quiet strategy enough to shift the balance of power once and for all? Only time will tell. But one thing is certain: the dollar's reign as the global reserve currency is no longer as secure as it once seemed. And now, the question is yours. What do you think? Is this the beginning of the end for the US dollar, or is this just a temporary shift in the global financial system? Let us know in the comments.